We don't have a lot of historical bear markets in Bitcoin, 2, 3 bear markets since Bitcoin's inception. The other issue is that if you look at when we came out of that bear market in 2019 to 2020, it coincided with the COVID collapse, which then triggered the Federal Reserve to print more money than we have ever seen printed in history.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway sharing his insights on the latest move for Bitcoin, the crypto market, and where stocks are headed in the coming weeks. Soloway says that Bitcoin's recent rally is just a mechanism of the bear market, and he predicts a downside move to at least $18,000. There's another bearish scenario that could take Bitcoin all the way down to $9,000 as well. Gareth also warns that an economic recession could lead to a 25 to 30% drop in the stock market, which would affect Bitcoin as a risk asset. He advises investors to be patient and disciplined and to accumulate Bitcoin in the lower ranges instead of buying at a higher price point now. Let's get right to the latest interview with Gareth Soloway as he gives his market prediction for the coming months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I'd just like to show you here, this is the chart of Bitcoin. And what we can see very clearly here is that we've had a big rally. A lot of people, like if you go on Twitter, they'll say, oh, it's the bottom. We're going to start a new bull market. I disagree. If you look at this M pattern, look at the M pattern. The second portion of the M is higher than the first. Now let's go back to the all-time highs on Bitcoin and look at that pattern. This is a classic topping pattern. So for me, what we've seen recently is actually a bear market rally. We've now come off of that 25,000 retrace with a bear flag. We then dropped, and we're now bear flagging with a likely downside move to at least 18,000 and change. And ultimately, I do think that we're going to see 12 to 13 and eventually 9. And think about this, right? You're in a scenario where if I'm correct that the economy is going to go into recession, then you're looking at the stock market probably with another 25 to 30% down from here on the S&P 500. Now tell me how Bitcoin doesn't go lower if the S&P drops 25 to 30%. We know it's a risk asset, at least right now. That's the likely outcome to the downside, in my opinion. We don't have a lot of historical bear markets in Bitcoin, 2, 3 bear markets since Bitcoin's inception. The other issue is that if you look at when we came out of that bear market in 2019 to 2020, it coincided with the COVID collapse, which then triggered the Federal Reserve to print more money than we have ever seen printed in history. And so the question is we're now in this new environment where I think it doesn't mean that the cycle won't play out exactly like it has. It just means we have to, as investors, take that into account, that there is no printing of money going on from the Fed and interest rates are a lot higher. So there is a precedent now that if you map that out, the Bitcoin bear market could even last a little bit longer, much like the stock market bear market. So I have a couple positions short in crypto right now, and I do have a little Bitcoin on the long side as well. So I'm a little hedged. I'm kind of short alts right now versus being slightly long Bitcoin. But the key is this, is it's a very, very small position. And what I want people to understand is that you can still accumulate in this lower range. I'm still a huge long-time bull or long-term bull on Bitcoin. I still think it's going much, much higher than even 69,000. It's just you have to give it enough time to kind of digest what the Fed is doing and kind of cycle out all the weak hands. So again, for me, it's just going to be continuing to accumulate. We get to 15, we get to 13, we get to 10, to 5. I will continue to kind of accumulate with a long-term view, but I'm not going to be someone that's chasing it at 25,000 on a pop here. I want to be patient. I want to be disciplined. And that's really what traders are going to be, right? If you're a successful trader, you are uber disciplined. Patience is the hardest thing to be. And the beauty of it is this, right? Is that I've been wrong on trades before. I've been wrong on many, but the key is that what I always understand as a technical trader is that if I miss one today and I'm wrong on it, there's always another one tomorrow. And that's the beauty of trading gold and silver and Bitcoin and ETH and stocks. And I mean, there's just so many things to trade that who cares if I miss one? Heck, I miss them every day. All you got to do is capture one or two here and there, and you become a millionaire.
Despite Soloway's short-term bearishness, he remains optimistic about Bitcoin's long-term potential to surpass its previous all-time high of 69,000, but he believes it may take some time to recover from the impact of the Federal Reserve's policies. Soloway then emphasizes not becoming too engrossed in any one trade and to focus more on technical levels and signals in the market.
Even when FTX collapsed, you didn't get a crazy amount of panic. You still had a lot of bulls that were still ready to say, no, don't worry, this is going to be fine. It was kind of the closest thing to that, which did mark a short-term low. But I still think you have to get to a point where, like in 2019, when we were at the lows, I still vividly remember, CNBC had talked about Bitcoin every day, and they had the ticker of what the Bitcoin price was every single day. And by 2018 into 19 in the bear market, they took it away and they never talked about it. And that was a signal to start accumulating. So essentially, when everyone else turns ugly bearish, where they're starting to write it off, that's when, as an investor like myself, starts to inch in. I also think you look for technical levels like the pierce of 10,000 to the 9,000 target. Think about how many stops will be right at that 10,000 level that'll get wiped out. You'll see major panic below 10,000 because it breaks the even number. Those are the signals that I kind of pay attention to. Interestingly enough, if we look at the S&P 500, in fact, let's jump right into the charts. What we can see is that basically from the initial move down, where we bottomed out in approximately June of 2022, we've now seen this sideways chop. And again, look at that. Really, the low here, I mean, you briefly violated it in October, but aside from that, you've been going sideways for a long period of time. Now, when you're a technician like myself, you start to recognize that a pattern like this is what we call a wedge pattern, right? And there's a defined wedge pattern here that unfortunately is more of a bearish wedge, right? You have a down move and then the wedge of consolidation is occurring here. So to me, it's a matter of time until the next leg comes in here. We're seeing the dollar pop today. That could be a headwind if the dollar continues to strengthen, as it's telling us the Fed may continue to raise rates. But bottom line is, investors should be very, very careful. I myself am mostly short at this point in time on the markets, just waiting patiently for that next leg lower. So let's go back to the S&P 500 and take a look here. So what we see here is that you're in this wedge pattern. If we were to break above this wedge pattern, you'd have to assume this is the beginning of a move up. It doesn't mean we're going back to all-time highs, but we're likely going up to this 4320 level on the S&P 500. So really, once you're above this yellow trend line, that would be where you would say, okay, you now have to exercise that mental stop or physical stop and exit the position. But right now, again, notice we're having a nice little down day. We're hammering on this trend line. If this trend line breaks, this is where the next leg lower should kick in. And ultimately, I think I still have it pinned in that we're going down to pre-COVID levels on the S&P 500. That's around 3375 and potentially as low as 33,000 on the S&P. The bottom line is you have to go back to the bigger picture here. And what we see is an economy that has a lot of uncertainty. You have all the macro issues. You have higher inflation potentially for longer. And even though interest rates are inching up, the Fed will be forced to step on the side of interest rates and stop hiking, at least in the not too distant future, due to a weaker economy.
Soloway notes that missing out on one trade is not a big deal as long as investors can capture profitable trades over time. He cites the price dip below $10,000 for Bitcoin as an example of a technical level that could trigger panic selling and create opportunities for investors. Overall, Soloway is optimistic about Bitcoin's long-term potential despite his short-term bearishness. He also predicts that the S&P 500 will fall to pre-2020 levels, possibly as low as 33,000 due to uncertainty in the economy. Soloway predicts higher inflation numbers and the potential for the Fed to halt interest rate hikes as a result of a weaker economy that will harm the dollar. What do you think of Gareth Soloway's recent market prediction for Bitcoin, crypto, and the stock market in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.